In this video, I'll discuss Q4 FY25 result and Concall of Khazanchi Jewelers. So, Khazanchi is a Chennai-based jewelry company. They are present in both B2B and B2C segment, but 95% revenue comes from their B2B segment. In their B2B segment, they make gold and diamond jewelry like necklace, chain, rings, Mangal Sutra, and all. And in their B2B B2C segment, they have a 1200 square feet showroom in Chennai, and they are going to open a huge 10,000 square feet showroom in Chennai, and this showroom got delayed by 2 months and it will open in the month of July. Because of it got delayed because of civil construction and the completion certificate got delayed. That is why the opening of this showroom of 10,000 square feet got delayed by 2 months. So that is the point. In terms of their B2B segment also, if I talk about more, they have closely 500 clients in their B2B segment, and their top 5 clients constitute their 30 to 35% of their revenue. Okay, so that is their company revenue. In terms of their result in Q4 FY25, their revenue grew by 200% in this quarter. They registered a revenue of 620 crore. In this year, they grew by 115%. So in terms of growth, they have a good growth. In the last year also they grew around 80-90%. In this year they grew around 115%. So the growth is good in this company. In terms of their guidance, the management is conservatively giving a guidance of 25% growth in FY26. If we look back 1 year ago, in the Q4 FY25, they also gave a Q4 FY24, sorry, they also gave a guidance of 25%. So but in this year, what they do, they done a growth of 115%. So in the last year also, say they gave a guidance of 25%, but they done well above of that 25%. And in this year also, they are saying they are expecting a 25% growth. But yeah, the management is saying that it can be better than that. So we can expect similar growth in the coming years also. So that is the point in terms of their revenue guidance. And the management is saying that what is driving their growth. One thing is their creations. One thing is their marketing strategy, and another thing is their product mix. Because the gold price got increased 30% in 1 year, they also entered into the lightweight segment. That is why they are growing 100% in last 2 years, and that is what driving the growth of the company. These 3 things. So that is the thing. And in terms of their 10,000 square feet showroom, they are expecting a revenue of 150 crore revenue in FY26. And another one thing is that they are expecting their B2C segment to contribute around 15 to 20% in FY26, which was around 5% 6% in FY25. So in terms of their B2C segment, they are expecting a good growth, and we all know that B2C segment have a better margins. So the margin profile will be better in the coming years, and I will discuss in EBITDA margin category. Okay. So in terms of the volume, they grew their volumes by 70% in this year. They done a volume of 2400 kg in the whole year. So in terms of their volume growth also, if we see in the last 4 years they grew 50%. They grew by 50% every year. So in terms of volume also they are doing really good job. And if we see Sky Gold, they also increased by 53% in this year, and Khazanchi done better than Sky Gold in terms of the volume. Yeah, there is a bullion part also in Khazanchi which is not there in Sky Gold, and in bullion part the margins are very low, like 1 to 1.5% of margin is there in bullion category. So that is the point. But yeah, anyway, their volume increased by huge 70%. Okay, so that is the point in terms of volume. And in terms of their past also, they grew by 50% in every year in the last 4 years. Okay, so in terms of volume they are doing a good job. In terms of margin, in EBITDA margin in this quarter, the EBITDA margin degrew by 200 bps against the Q4 FY24. The EBITDA margin got decreased because of the high contribution of bullion sales in this year, or in the last part of this year. The bullion sales were very high if we compare it to the last year, because in the last year their bullion sales was like 16%, and in this year the bullion sales is around 50%. Okay, so yeah, we can see that the bullion sales are high in this year or in this quarter. So that is why the EBITDA margin got decreased by 200 bps in the quarter of Q4. So that is the point. But the thing is that the management is saying that as the B2C segment will grow in the future, like now they have 5% sales from B2C. In the next year, I mean FY26, they are expecting the B2C segment to contribute around 15 to 20%. So as the B2C segment will grow, the margin will be better, because if we look their B2B segment, that have around 4% margin, EBITDA margin, but in B2C segment they have a EBITDA margin of 9 to 10%. So the gap is clear, and the gap is around 5 to 6%. So that is the point. The management is saying that if we can reach 15 to 20% B2C segment contribution in terms of the revenue, so then the EBITDA margin will be better in the FY26. That can be around 5%, but yeah, the management is saying that in 2 years we will achieve a 5% EBITDA margin. So that is the thing. The EBITDA margin of the 5% EBITDA margin can be achieved by FY26 also, but yeah, they are saying that they will achieve it by FY27. So that is the point. We have to see that how this B2C segment grows in the future. That will be an important parameter in this company going forward. So that is the thing about the B2B, B2C margin and the guidance that the management gave in this phone call. In terms of the PAT, they grew their PAT by 115% in this quarter. They registered a PAT of 12 crore in this quarter. So in terms of PAT growth also, that is really good. Yeah, obviously the operating leverage is missing because of the high bullion sales, because in bullion sales they have a margin around 1 to 1.5%. So margins in the bullion sales, in the bullion category, is very less. That is why there is no operating leverage per se. But yeah, if they can grow their B2C segment, that will be a huge operating leverage. So that is the thing. In terms of PAT margin also, the PAT margin got decreased by 80 bps in this quarter. Obviously, if we look at the operating leverage is missing, so that is why the PAT margin goes down, came down. The PAT margin is around 2% in this quarter. So that is the point with PAT margin. And as the EBITDA margin will increase, if the EBITDA margin increase in the future, then also the PAT margin will increase. So that is the point. So let's talk about the valuations. In terms of the valuation, Khazanchi is trading around 31x PE. And if we look at Sky Gold is trading around 35x PE. So if we compare both, because I comparing it to Sky Gold because the B2C segment is very less in this company. Yeah, there is a gap because there is a bullion sale in Khazanchi, but there is no bullion sales in Sky Gold. So there is a gap between them. But yeah, anyway, I think Sky Gold, and if Sky Gold is trading around 35x, then Khazanchi is trading in a very fair priced level. So that is the thing I have to say with Khazanchi. And we have to see one thing in the coming years, that how the B2C segments are growing. One thing I missed, that they will open 4 to 5 branch by FY28. So yeah, they are looking to expand in the B2C segment also. So yeah, the main thing is what we have to track the B2C segment, how this B2C segment evolves in the coming years. So that would be the main point in this company. If they can grow their B2C segment, then yeah, the rating is absolutely on the cards. So I think that's it for the video. Thanks for watching.